Good morning, traders. Welcome back to another video. I was meant to record this video last night, but I did have some family things to take care of, so that was not possible. I do apologize for that. Now, the information I'm going to share is just going to help anyone that is struggling with trading, and also in particular I want to give something to help anyone that is looking at ARN and thinking or considering of using it but doesn't have any strategy to use. This is something that you can look into. Okay, I'm not saying this is all that I use, but it's something that you can look into, and then if you do find it helpful, then by all means go ahead and use it. If you look into it and it's not what you're looking for, then by all means move on. Okay, so the way I personally use ARN, right, is I use price action to determine where market is trying to reach for, and then if I decide a particular pair, I look at the higher time frame. So I look at the daily, I look at the weekly, and then based on what these two time frames are doing, I drop down to the H4. Okay, so the weekly, what do I look for on the weekly? I'm looking for where the wick is looking to expand to. So is the wick going to expand to the upside, or is the wick going to expand to the downside? Okay, so this will be my down candle and this will be my up candle. Now if I come to a conclusion where it's going to expand to, then on the daily I'll be looking at the dealing range that price is currently trading within. So on the daily time frame, you will find whether we are, let's say, we've made an impulse leg and price is retracing, or we've made an impulse leg and price has not initiated any pullback yet and is still inside the impulse leg. Okay, or price would have made an impulse leg to the downside and is shaping to come up in a retracement, or it's already up here and it's looking to go back down here, so I'm trading in that direction. Okay, so on the daily time frame, if you can determine one of these conditions, right, are we trending up or are we trending down? Did we just go below a short-term low? Because if we did, then chances are it's gonna pull back. So on the daily, it's very simple. I use, are we trading above a short-term high, or are we trading below a short-term low? Okay, and what does that look like on the weekly time frame? Because if we are above a short-term high, then obviously the weekly should be expanding higher. If we are below a short-term low, the weekly should be expanding lower. Okay, so once I come to conclusion, then it will tell me, or price will tell me whether to buy long, sell short, sit on my hands, or wait for price to confirm and then I go long again. Okay, once I come to the conclusion, then what I'll do is on the H4 time frame is where I'm going to be paying more attention to, from Monday to Friday. So as an example, let's say price has traded into a discount level. Let's say we had an impulse leg, price retraced, and right here we had a confirmation, so we've traded above a short-term high. Now I'm not gonna go into the time frames to show you this, but trust me, you can do that yourself, and you'll be amazed what you find. So this will be a daily time frame, and I'll give you an example. Look at CAD yen and Swiss yen and Aussie yen. Okay, those three pairs. Look at that on a daily time frame. You will see example of what I'm discussing here. So on the daily time frame, price expanded up, went above a short-term high, and then retraced over here. So upon retracement, I'm looking for price to go back up here, right? So down here, I start anticipating a reversal. So this usually will become either a Tuesday low forming to expand up, or it'll be a Wednesday low of the week forming to expand up. Once I get the confirmation, right, then from here to there, I'm looking at an to give me bullish confirmation or bullish confidence every single day. So if, let's say, today is Tuesday, that particular Tuesday, I'm expecting AND to give me a bullish confidence. Now sometimes before it turns around, because of this bearishness, it might give you a bearish confidence number, but I wouldn't trade that, because if we are down here, I'm expecting price to turn around. So I wouldn't be looking at the bearish confidence to say, okay, I'm going to sell short. I'll wait for maybe the next day, because if we are in discount, price is going to turn around and go higher. Okay. Now once we get the confirmation, then every single day I'm expecting AND to give me a bullish confidence number. It doesn't matter the number. If we are inside a dealing range like this and we've dropped into discount, then going forward it doesn't matter the number, because we are bullish and price will turn around to go up and take out this high. So we've come back for internal range liquidity to go for external range liquidity up here. Okay, now what do I do when I get the confirmation right here for price to go up there? I drop down to the H4. Okay, and then on the H4, this is very specific. You want to identify on the H4, right, the day that price has turned around and it starts going up. On the H4 at 6 a.m. London, okay, 6 a.m. London time, the H4 candle that starts, you want that candle to close, as we are going up here, you want that candle to close above the 2 a.m. H4 candle. Okay. So we have 2 a.m., 6 a.m., and then 2 p.m. All right. So the 2 a.m. candle might be a down candle, it might be an up candle, it doesn't matter. But this candle here, which is the 6 a.m. H4 candle that starts at 6 a.m., should close above this one here. Okay, if it does close above it, now there's a guy on Twitter, I can't remember the name, he does share some information on how many candles makes up a H4, how many candles makes up a daily, how many candles makes up an hourly. You can search for him. I think it's I'll find the name and I'll share with you. But he does provide some nice information about candles, and I got to understand this by just observing price action. Okay, by just staring at the screen, watching every candle play out. Now, if we get a close above this candle, there's a high probability that this might be, if we are inside price action like this, okay, don't lose sight of this. If we have price action like this and we get the 6 a.m. to close above the 2 a.m., then there's a high probability that London might not trade lower. Okay, so then the 2 p.m. candle, because this one is going to finish at 6 to 10, and then the 10 o'clock will open and finish at 2 p.m. Okay, there's a high probability that that particular candle here is going to be the low of the day. So this that opens at 10 will also close above this, right? It will also close above this. If it does that, by the time it does it, it will be 2 p.m. Now bear in mind, Anne gives the signal at 106 to 107, right? So you'll be left with 1 hour candle on this 10 to 2 p.m. candle. Okay, so there will be 1 hour left, because between 1, 6 and 2, that's that 1300 candle. Okay, that 1300 candle that opens, that's the one that is going to finish at 2 or 1:59, and then we open the 2 p.m. candle. That 2 p.m. candle is going to be a different H4 candle. Okay, so this one will finish at, let's say, 1:59, 13:59, and then 2 p.m. will open another H4 candle. If you have this price action inside here, that 2 p.m., you want to highlight this candle's high, okay, and then anticipate it retracing to form the low of this candle to expand up. Okay, so when the signal comes out, what you'll be waiting for is for this 2 p.m. candle to close. If it does close like this, then there's a high probability, if we are inside this price action, okay, the next H4 candle is going to expand up. So you can wait for it to pull back to this candle's high. Sometimes it might not, it might just pull back slightly, but there is more to where this low can form. You can read in between the lines, because I'm not trying to give everything out, because I did tell my members what I was going to share. So this candle's low can form somewhere within this candle. Okay, it's not gonna trade down here, it's gonna trade within that candle and then form the low and then expand up. Okay, so that particular day I'm expecting Anne to be bullish. I don't care about the number, I just want it to give me a bullish confidence. And then if I have this price action, I'm gonna buy the low of this candle. Okay, or sometimes this 6 a.m. candle will not close above the previous H4 candle, right? If it doesn't, no problem. This one here, the 10 to 2 p.m., the 10 a.m., and my time is London, so pay attention to the time. This 10 a.m. to 2 p.m. H4 candle, right, must, if this 6 a.m. doesn't close above the 2 a.m. H4 candle, then the 10 a.m. to 2 p.m. candle must, this is a must, okay, it should close above this, the 10 to 2. Okay, so the 10 a.m. to 2 p.m. H4 candle must be closed above. So this candle here, that one must close above it. If it does, I'll do the same thing. So you have two options. The 6 to 10 closes above this, and then the 10 to 2 closes above that, then you buy. If the 6 to 10 doesn't close above this, then the 10 to 2 must close above that, and then you can get that confirmation to buy if we are in this condition. Now, whatever I said here, reverse it for the sell side. So if you are selling, we must be trading below a low. Price has traded into premium, and then we're expecting price to go down again. Once we get confirmation that price is going down, do the same thing between the 6 and 10. A candle must close below the previous candle. Okay, if it does, great. Then I'll expect the 10 to 2 to also close below that. So the most important to me is this one here, the 10 to 2. The 10 to 2 must absolutely always close below this. Okay, if you have both of them, it's great because it's showing you momentum to the downside. But if you have just this one, it's also good because there's only, I think yesterday I was counting 6 candles. Is it 6? 6, 4. 6 times 4, 24. Oh, am I lying? Yeah, 6 times 4 is 24. Says there's only 6 H4 candles within a daily candle, right? So by the time this candle actually prints, the 10 to 2 10 to p.m. candle print, you've only got 2 more candles, I think. Yeah, you've only got 2 more candles. So that 2 candles is what you're going to be looking for your entry, and that entry can lead you into getting a short-term trade, not just a day trade or a scalp. It can give you a short-term trade because remember, you are selling inside a predetermined trend. So if you are selling here, you by default are shorting to come down here, so you can hold on to that short and keep selling every single day to come and attack this long. If this condition is present, then you go in and then you sell. Okay, so it's not just going to be a scalp, it's going to be a day trade / short-term trade as well, because that's how I trade. I trade short-term and then day trade and scalp at the same time, because I'm always trading inside some sort of a dealing range on the daily time frame, and I'm always with the trend. So if I'm with the trend, I can short-term trade, I can day trade, and I can scalp, all in this direction. Okay, so once you get your entry, you can hold on to some of the trade. Now I'm going to show you examples. It's not going to be all theory, but I want you to understand it, because once you understand it, you will be able to go into the chart and basically execute without me being there. Okay, so the important thing, right, I'm spending a lot of time here, but the important thing is that the 10 a.m. to 2 p.m. H4 candle should close above the 6 a.m. to 10 a.m. candle. If both close above, so if this close above and that closes above, fantastic. This one is going to be no-brainer trade, and then you take a trade in the direction of the trend. All right, so hopefully you understand the protocol. So daily, you're looking for the dealing range, and then obviously if you look at the weekly, you should see the weekly looking to expand up, and then here daily, bearish dealing range, and if you look on the weekly should be looking to expand down, right? And then once all these two conditions are met, go in and start. So even once price makes this new high and it's retracing, you can still sell in a counter trend, If you're a new trader, probably not, but if you are experienced trader, you can use that same idea over here to sell short to come into internal range liquidity. Okay, and then once you get down here, wait, let it confirm that it wants to go up, then buy with this condition using and confidence to go back to external range liquidity. Okay, so with that said, let's go in and then look at some examples. Say for example, this is not going to be the best, so let me go on to over here. This is a trade I took yesterday. So we had impulse leg and price pulled back to OTE. Okay, now once price traded to OTE, I'm gonna look at the H4 in here. The confirmation came on Tuesday, so I had to sit on my hands and wait till Tuesday closed, and then Wednesday use the idea, and then potentially today I'm gonna use that idea. Okay, so let's go to the H4 and then show you what I mean by the 6 a.m. candle and then the 2 p.m. candle. So this will be the 6 a.m. candle, right? This one should close above this candle's high. If it does, that's great, because we'll be expecting the next candle to also do the same thing. If it doesn't, this candle must absolutely close above this. If you do get this price action, then this candle is going to open at exactly 2, right? So at 2, you are anticipating this candle to be bullish, to expand higher. Remember, we are trading inside a dealing range, so price is going to go, or we are moving away from internal range liquidity to external range liquidity. So the H4 candle is by default going to expand higher because it has to go back up again. So if we get this to close above that, then this is going to open, form a low, and then expand higher. Okay, so I'll be looking at this candle, and then like I said, that information I'm not going to share. Where this low is going to form, I can know that. I'll be able to know where this low is going to form, and then I'll get into a long. So when Ann gives you the confidence number, you will have to wait till the 2 o'clock candle closes. So this candle must close, this candle must close, and then this will open. So if I drop down to the 1 hour, it looks something like this. This will be exactly 1, but this candle will close at 2. Okay, so you have to sit on your hands for this candle to close. Once this 1300 candle closes, the H4 would have closed. This H4 candle would have closed, and then we open a new candle. So we're going to open this new candle. So this new candle, you're hunting for the low of that candle. So you be looking at this opening price here, and then where the low can potentially form. Like I said, you can do a bit of back testing and then look into how you can catch this low. Once you catch this low, hold on to it, because it can be 1, a short-term trade, it can be 2, a scalp, and it can be a day trade, right? So when I took this trade, I anticipated them going, you saw earlier, up in here. Okay, I anticipated them going up in there, so I'm getting a trade here to go up there, but ultimately it's gonna go up there because I'm trading with the trend. So the trend is bullish, so it's gonna end up trading above that. So I can hold on to a trade here, 1 position, or I can take 2 positions, close one here, and then leave the rest to go up there. And then today at 2, I'll be doing the same thing because price is gonna go up here. So today I'll be doing the same thing. So it's now almost 8 o'clock. So I'll be expecting this candle to close by 10 a.m. I'll be expecting that candle to close above this high. And if it does, the 10, so this one here, the 10 to 2, I'll be expecting that to also do the same. And if I get that 2 p.m. candle, this one, I'll be hunting for where the low is going to form. And then if AND gives me bullishness, which I think it will at this time, because we've confirmed that it's going up, so AND will definitely give a bullish confidence. It's just the number. Even if it's low, I don't mind. I'll still take it because it's gonna trade up here. Okay, so by 2 p.m. I'll be hunting for another long on this pair. Right? I didn't want to do it, but I'm feeling moved to do it. So let's go to CAD-yen, and then look at from here. Or let me do it from here. From here to there, that's a retracement, and then look in here. Okay, look in there. So I'll leave that to you, and then maybe and data probably might not go all the way back to that time, so you can look in this one too, from here to here. Look into that. Also look into this high to this low, from here all the way up here, and then look at every single day how you could have got into AND by using the information that I've just provided. And then from here all the way up, look at the H4, and then look at the time of the day, and then see if you will not be able to get into some decent trade, because all you're doing is you're following the trend. Okay, it's not hard. Just make sure that you have a potential high probability dealing range that price is gonna do what? Expand up or down. So in a bearish trend, you'll be doing the same thing as price is moving lower. Let's go to Euro Pound. Say something like this, the one that I used I think it was Tuesday over here. So I'm bearish. I'm looking for price to trade lower. We pulled back to rebalance, and then at the 10 o'clock candle, this is the 6. It didn't close below that, no problem. This one did close below that, right? So once this candle closed, this one opens and then trades up. And then what I did was find where the high of this candle was going to form, and then sold short. And there was a H1 imbalance in here. That's why I got out. And today, actually, I'm expecting that to be the same. I've actually missed my trade right there. So I was looking to sell short here. Now, if you don't know about gaps, you should spend all your time looking into gaps, because gaps is everything. Alright, now I'll expect this one to drop down here, and then potentially this low. By the time I drop this video, probably would have done it, and you can go in and check. But today, right, I'll be expecting something like this by 10. If I don't get something like that by 10, I'll be looking for it by the 2 p.m. Okay, if I get it by 2 p.m, great. I'll be looking for AND to give me a bearish confidence, and then I'll use that to sell short to continue on in the trend. Okay, it's very simple, but it requires you to think a little bit in terms of the trend. So if you cannot determine the trend, don't use it. If you cannot know whether it's trending up or down, don't use it. So in a condition like this, right? You're trading below short-term low, price pulls back, confirms that it wants to go down every single day. That's your trade using the H4, selling short to come here to come for this equal low. Okay, so hopefully you have found something out of it, but there is more, and as every day, what that I shared is enough for you. You just have to spend some time with it. Now, if you don't have the AND data, I think yesterday they did post most of the back data, so use it. Go in on Twitter. Actually, I'm here to help, so let me bring it up. Let's go over here. Now, yesterday they did post, I think, all the data. Unless, I'm sure I did see it yesterday. Okay, I might be lying, but I am 100% sure I did see all the data being posted yesterday. I'll find it and share it on my Twitter account. But they did share most of the data that was provided, I think, over the course of last week. I'm just gonna give you a small preview of what I mean. So they did provide all this data on Twitter, right? So what you do is use the information that I've provided, go in and look at the days it gives the bearishness, put in what I've just shared with you, and then look at the confidence, the direction and the confidence number, okay? And then see if you will not get, even if it's not in the direct, if you are not trending. I'm giving you trending because it's the highest probability, okay? If price is trending, then it's the highest probability, but if it's not trending, you can still get some trade ideas. Yesterday I was back testing because when I know, but I wanted to make sure that they are there. You can see here, that's 6, okay, and that's 2. So when AND came out, it traded into the short-term high and then rejected and traded down. That was a scalp in a bullish trend here. So even if we are not in a bullish trend, you can still use it, but I'm giving you the best, okay? Another example over here, 6, okay, price closes above that, 2, price closes above that, and then this one opens at 2, and then you can see what happened next. Okay, let me go over here. This will be 10, this will be 2, right? And then you're looking to sell this particular candle, and you will get stopped out here, right? But in a trending market like this, you'll be shocked with what you get by using the H4 close. Let's go to Aussie New Zealand. Look at this trend, right? Imagine if you understand that they should be going all the way up, because I just closed my trade yesterday. I've been using it on this H4. Okay, I don't want to share too much, so what I've given you is enough. You look at the H4, and then you see lots of trade ideas with AND giving you bullishness. I think yesterday was a good one. We had a bullish long on AND, and this candle pulled back to give you a trade to trade up into that level. And this was Monday. Monday didn't give you any trade because it didn't close. So if it doesn't close, then you don't have any trade with AND. But if it does close, then you are in. That's 10. It closes. You're looking for this low and then buying. If you understand where price should be going, you're holding on to this. My trade was here. I traded that one long and then held on to it, and I closed it yesterday. Long from here, closed there, and I had another long from down here because we were anticipating it to go up. So my trade was here. When this candle closed above that, this pulled back, buy it, stop here, and then I closed it here. Okay, so that's all I can share with you guys for today. Hopefully you find it insightful. Go through price, right? That's what I would recommend. Find the data that they've shared on Twitter. I think it's there. Probably in a hurry to not spend too much time on this video, so but go through their Twitter and then you see the data they provided, and then use what I've just shared with you, right? I'll give you one last example. Look at this pair from up here all the way down. Look into it and then see if you not see profitable trades in this. Okay, so enjoy. I'll still be providing more, but for now this is all I can share. I'll see you in the next video.